everyone. I hope my screen is working and really excited to be here. Good morning and good evening to all of you, wherever you all might be joining from. Really quickly, a little bit about myself. I'm a product strategist and blockchain expert with over 5 years of experience in the blockchain domain. I'm currently driving strategic initiatives and building product at Thalo, a leading carbon markets infrastructure player. We're working with different partners across the spectrum, trying to solve some of the key challenges in carbon markets and so on. Let me start with a real quick story, which is actually something that's happening recently with me. I'm moving to China by the end of this month, and while purchasing essentials, I was positively surprised to see a spate of net zero flight tickets, green t shirts, not the color, essentially versions of sustainable commodities galore. So here's where I got the idea of looking into it. And let me throw some really mind boggling stats at you. Consumers have been endorsing environmental claims and green claims heavily. So this is evidenced by a growth rate of 9.5%, which is nearly double of that which we see in conventionally marketed products. The products that do not really say anything about being green or sustainable and so on. And this is sustainable products experience double that growth than conventionally marketed products. And consumer behaviorists actually think that this is not a fad, rather a secular upward trend. And on the other hand, there's consumers who are saying 57% of consumers are saying that they would change their purchasing habits to avoid harming the environment. There are more than 50 global airlines that are offering carbon offsetting to passengers. And to put everything in context with respect to the size that we're looking at here, Americans are expected to spend upwards of $21 billion a year to mitigate the environmental impact of their purchases by the end of this decade. And adjusted for inflation, this is a huge number. And if these habits are mirrored in other developed economies, then global consumers will collectively pay nearly $100 billion to offset goods and services by the end of this decade. Also, on the other hand, this is of course a result of conscious and concerted efforts being made by companies towards their net zero commitments. Of course, usually these claims are an outcome of a company's decarbonization journey, which would involve their Scope 1, Scope 2, Scope 3 reporting, any emissions reductions initiative that they take within the value chain that are necessary. But of course, it should be taken into account that companies will continue to need to invest in carbon credits to plug in and hit that last mile to reach their net zero and carbon neutrality targets. And of course, all the while continuing to make veritable green claims. But today, it is a challenge for companies to be able to do that. To vet, to source, and invest in high quality carbon projects is a real big challenge, and this creates a really crucial accessibility issues for the companies. So, accessibility is a problem. But on the other side of the story, if we think about you and I, the consumers, we are always and constantly trying to figure out the extent of integrity of any green claims out there. And so the question then becomes, how do we bring greater accessibility and integrity to green claims? Now, in my opinion, this particular problem needs a techno-legal solution. Why I say techno-legal? Because there has to be legal reinforcement of regulations, ambitious targets being set, strict standards, and so on. And then technology needs to come in and buttress some of these regulations and support the implementation and enforcement of these regulations. So, for instance, really quickly, if I were to talk about one of the latest policy directives that have come out from the EU, the Green Claims Directive, it aims to safeguard consumer interest in the emergence of all of these green claims and labels. So, the vantage point that EU Green Claims Directive has taken is to put consumer squarely at the center and requires companies to disclose more and more information and establish necessary parameters to call a product green, and thus protecting consumers from false claims and ensuring that the perceptions being formed around the brand are credible and well earned. But the other aspect of this is that while governments and regulatory bodies build up these guardrails, companies need to have a pathway to embed integrity first offsetting into their existing products. And this calls for a carbon market of the future, where technology will support the implementation of these standards. The gap between claims and verifying their impact has to be bridged by a technology stack that's built to enable transparency and scale. And this is where blockchain comes in. Now, blockchain brings with it three key things: traceability, transparency, and immutability. And most of the audience here would know why all of these things matter, but to really quickly touch upon each of these features, traceability ensures that the impact of claims will be traced from the point of origination to the point of dispersing financial benefits to the communities where these carbon related projects originated, different geographies and different diverse areas where these projects are originating, supporting different SDGs and so on. And you can really trace the impact. Now, the second thing is transparency. This means that all relevant stakeholders will have greater visibility. For instance, the consumers, all of us, would be able to understand where our finance has gone. Institutional investors will be understand where their finance has gone, and so on. So this will lead to greater trust overall. And immutability. This will make data records tamper proof and allow for neat auditability end to end, thus again reinforcing confidence. Now imagine a world where data is recorded end to end on a blockchain, and at all times updates are expected to be credible owing to the property of immutability. Not only can companies trace the origin and destination of various carbon projects, but also consumers can be assured of the integrity of a green claim. And climate finance can thus reach stakeholders seamlessly across the ecosystem. Furthermore, this infrastructure would lend itself to the future of end to end carbon accounting, where emissions across supply chains are traceable and offsets can be mapped back to those emissions. And at this point, the negative externalities will be nothing less than accounted as another cost line item in companies' books, while investments can get recorded as assets. And this is what makes the carbon of the future, or the carbon accounting or carbon management of the future, where everything is so seamlessly embedded in existing day-to-day business that it's not a separate activity that a business has to take up and is already accounted for in their systems throughout. Now total direct and supplier. Oops, I think my recording just paused for a second there. But yeah, so Harvard recommends this environmental asset and liability framework, and nudges organizations to produce real-time, accurate, supplier emissions data. And as frameworks like these pick up and are adopted, become more prevalent, blockchain can come in and be leveraged to scale carbon markets of the future in line with such accounting frameworks. Another wonderful example of leveraging blockchain is the recently launched Opschain ESG product from EY. Now, it's a first of its kind product which is enabling organizations to tokenize their emissions in a bottom up fashion throughout the supply chain. And as they generate more and more data, they can do more real time accounting, reporting, analysis, and be able to invest in climate action where it's most necessary, making everything seamless and transparent. Really quickly, also touching upon what we're doing at Thallo here. We at Thallo are building towards this carbon market of the future by providing organizations with our carbon as a service API, thus enabling companies to access high quality credit supply on one side and providing them the infrastructure to offer to their customers and their clients an ability to seamlessly offset, and bringing both of these sides together in such a resource efficient way where companies don't really have to go and vet and investigate all the projects because we're sourcing all the highly accredited supply. And also on this side, they don't have to build all the infrastructure to enable this offsetting mechanism because they can just seamlessly in their existing tech stack integrate with our API. And this helps companies to introduce new revenue streams, unlock new demand, and has applications across industries. So to just wrap it up, I would say that blockchain, of course, is not a panacea of a solution. And with all technologies, of course, problem solving tends to happen in silos. But for instance, at Thalo, we've been trying to mitigate this by focusing on powerful and proven impact areas first, such as we're trying to build in a very product developer focused way, ensuring that product developers are a band center of our focus and they get all the climate finance and everything is traceable end to end and so on. But to conclude, blockchain can be leveraged to bring greater accountability, integrity, and accessibility to carbon markets, and hence advance climate action. Thank you so much for joining me here. You can connect with me on LinkedIn. I'm at Saudamini.Sharma at thalo.io. Looking forward to hearing any of your questions and really happy to see that this discussion is happening. Thank you.